Let's be real for a second. We've all been sold this dream about investing, and honestly, for a lot of people, it's built on a really frustrating half-truth. We're going to talk about compound interest, but more importantly, we're going to expose the hidden reason it feels like it's just not working for you.
You know this graph. I mean, you have seen this thing 1,000 times. Every single financial guru out there promises that this beautiful, sweeping curve is your destiny, that just a tiny little seed of an investment will, if you're just patient enough, magically blossom into a mountain of wealth. The message is so seductive, right? Just start and let the eighth wonder of the world do all the heavy lifting.
But if this graph is so real, if compounding is this unstoppable force of nature, it brings up a pretty big question. Why are so many people who have been patiently investing for years, sometimes decades, still struggling? It's not because they're doing it wrong. It's because that graph is hiding a massive secret. And that secret is something we're calling the $100,000 wall. Think of it like a hidden threshold, the minimum price of admission for compounding to go from just, a boring concept in a textbook to a powerful force you can actually feel in your life.
You know the classic story they use to sell this dream, right? The penny that doubles every single day. The problem with that? It's a 100% daily return. It's a complete fantasy. As you see here, reality is something closer to an 8% annual return. The myth is all about this explosive daily growth. The reality is about slow, almost invisible, yearly progress.
Okay, let's actually put some real numbers on this. So with a $5,000 portfolio, an 8% return gets you $400. And the interest you make on that interest? It's a measly $32. Now look over at the $100,000 portfolio. That same 8% gets you $8,000, which then earns an extra $640 all by itself. That is the difference. One is like a little sprinkle of dust, the other is a snowball that's finally actually starting to roll downhill.
The legendary investor Charlie Munger, he said it best. And when he said this, he didn't just mean it was emotionally tough, even though, yeah, it really is. He meant it was mathematically a grind. Below this $100,000 wall, you are the engine. Your savings, your income, that's what's moving the needle. It's only when you get above it that your money really starts to do a meaningful share of the work.
And this mathematical reality, it creates this huge problem for the vast majority of investors. It's a period we can call the Great Stagnation.
And look, this isn't just some theory. The data is pretty sobering. The median retirement savings for a U.S. household that's getting close to retirement is only about $185,000. And remember, median means half of all households have less than that. For millions of people, their entire working life has been this long struggle just to get near that $100,000 wall, let alone get over it.
So here's the bottom line. Most people spend their entire financial lives right here, on this long, flat, incredibly boring part of the compounding curve. They're just waiting for the magic to finally kick in. But by the time the math starts to get even a little bit interesting, they're already at an age where they need to start pulling that money out. And this is exactly why that standard advice to just cut out the lattes can feel like such a slap in the face. For so many of us, the gap is just way too wide to be closed by being frugal. I mean, if your income is tight and your bills are high, optimizing your spending isn't going to get you over that wall. The real issue isn't what you're spending, it's what you're earning.
And there's a huge psychological cost to all of this. You invest diligently for years, and your balance barely moves beyond what you personally put in. Your gains are so tiny they almost feel pointless, insulting even. And all the while, you're seeing stories of massive success online, and you start thinking, what am I doing wrong? The answer is, you're not doing anything wrong. The math just isn't on your side, yet.
So, okay, the wall is real. The stagnation is real. But this isn't a reason to give up. Not at all. It's a reason to get smarter. Here's how you actually scale the wall. It's really a three-part solution. First, you have to see income as your primary lever. Below that wall, your ability to earn is so much more important than your investment returns. Second, protect that base. An emergency fund isn't just a good idea, it's the firewall that stops a small setback from turning into a total reset. And third, you have to change how you measure success. Forget about that exponential chart. Track your net worth. Celebrate the milestones, hitting 10K, 25K, 50K, because those are the real wins in the early game.
Think of it like this. You're not waiting for magic, you are building a runway. A plane can't just take off from the first foot of pavement, right? It needs the entire length to build up enough speed. Every single dollar you save in these early stages is another foot of that runway.
it is all absolutely essential for that eventual takeoff.
So let's bring this all home. The real challenge isn't investing. The real challenge is having the right mindset and the right strategy to survive the beginning.
You see, understanding that this $100,000 wall exists isn't discouraging at all. It's empowering. It's a massive strategic advantage. Because once you know it's there, you can stop waiting around for magic to happen, and you can start building the ladder to get over it. You can focus your energy where it will actually make a difference.
This, right here, is the single most important thing to take away from all of this. The hardest part isn't picking the right stocks or trying to time the market. It's having the mental toughness and the right game plan to survive the beginning when it feels like absolutely nothing is happening. So if this explainer changed how you think about building wealth, if something just clicked for you, let us know. Drop 100K in the comments. It's a simple way to say, I see the wall now and I'm ready to start building my ladder.